So this is like a real revision that you should watch at the end of your exam. Okay, fast track revision for cash flow statements. Before I go to this revision, I want to tell you
Yes.
that you have your paper which is of 80 marks. Okay,
Yes.
your section B would contain a thing where you have to answer 2 or 3 questions, in which one question will be of cash flow and you have to answer this without fail. One question would be of ratio and one of comparative and common size. Your
Yes.
section B contains 25 marks and you should aim at getting this 25 marks without fail. So these are the topics that is going to help you pass in the exam. When I talk about cash flow statement, IAS 7 deals with cash flow statement. It is prepared for a period and it is only dealing with cash, 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 cash. Cash coming in, cash going out.
Oh, yeah.
Anything that is apart from the cash is going to be removed from here. Okay, so non-cash expenses are going to be removed from here. Some examples of non-cash expenses are depreciation, goodwill written off, patents written off. You add back. Why do you add back? Because you had removed, now you need to add it back. Okay, so anything that is dealing with non-cash does not come in the cash flow statement. This deals with cash and cash equivalent, and when I make the cash flow statement, it has operating activities, investing activities, and financing activities. When I talk about operating activities, these are your normal revenue generating activities. And when we deal with operating activities, what do? We prepare one format which should be our Bible format.
Yes.
Are you with me? So
Yes,
you
sir.
know the things or you don't know the things, you write these things over here. It would be cash
Yeah.
flow from operating activities. You always start with net profit before tax, which would be in your working note number 1. Okay.
Yeah.
Then you write your operating profit before working capital changes. Cash generated from operations minus tax paid. You get cash flow from operating activities or cash used in operating activities. Are you with me?
Yes.
When I talk about my working note number 1, my working note number 1 is going to give me my net profit before tax and extraordinary items. This is always my starting point. Are you with
Yes.
me?
Yes. Yes.
Have your profit and loss balance. You will do closing minus opening, transfer to reserves closing minus opening, proposed dividend of the previous year, interim dividend of the current year. Okay. Any provision for tax, this you get from the account. Okay. Are you with me?
Yes. Yes.
Which account you get this provision for tax from?
Taxation account.
Taxation account. Do you remember the taxation account?
Yeah.
Tell me.
On debit side, two bank account, and then two balance carry down,
You
and then
have
on
the
the credit
opening
side,
balance here, you have the closing balance here,
closing balance.
and this is the
Yeah.
amount that goes in your working note number 1.
Yeah. Yeah.
Okay, so your closing minus opening plus paid.
Yeah.
Okay, if you want to know it by formula, it will be closing minus the opening balance plus the tax that is paid. Now understand,
Yes.
sometimes you are given information about the tax paid. Sometimes you're not given any information, you are only given the provision for tax last year and current year. What will you do? The last year will be treated as paid and the current year would go in
Yeah.
working note number 1. These are the
Yes.
only 2 options that is done with the provision for tax. Okay. If you are given information about the paid, this bank would go in your operating activities last part, and this would go in your working note number 1. But if you're
Yes.
not given any information about paid, last year you will pay. So last year would go at the end. Okay, and the current year provision would come in your working note number 1. With me?
Yes.
Okay. Then after that, you have your non-cash, non-operating expenses. Non-cash, non-operating expenses. I hope you're clear with working note 1.
Yeah.
Then you have your non-cash, non-operating expenses. So whatever are your expenses and non-cash items, you will add.
Yeah.
Income you will subtract. Non-operating income you will subtract. The common non-cash, non-operating expenses are depreciation, loss on sale of non-current assets, and goodwill written off. Common
Yes.
non-operating income would be profit on sale, dividend received. Also, you have interest on debentures, sometimes share issue expenses. So these are also non-operating expenses.
Yes.
So your working note number 1 is clear. Non-cash, non-operating expenses. For this, you also prepare an account which is called the asset account and
Asset account.
depreciation
Right.
charge for the year. Are you with me?
Yes, miss.
From the asset account, what information you get?
From the asset account, we get,
Buy or sell of non-current assets.
right, yes.
Okay.
So, current asset.
Depreciation for the current year, how will you get?
Depreciation, this thing, the ending year
Hmm?
minus the beginning year plus sales.
Closing minus opening plus
Yeah.
sales. Okay. Even for the asset, if you want to calculate purchase of asset, how will you get?
Um,
If you want to calculate purchase of the asset, how will you get? Same thing. Closing balance
okay.
minus the opening balance
Opening balance.
plus sales. But here you will take the asset cost into consideration, and here you are going to take your accumulated depreciation into consideration.
Depreciation.
I am giving this fast track only keeping in mind that you have watched all my videos and now you are using this for your last minute revision.
Yes,
Okay? So with the asset account, what do you get? Buying or selling of non-current assets, and this will be used where? In which activity?
this operating.
Investing.
Oh, investing, right.
Investing activity. The depreciation of the non-current asset, where will it go?
Operating, right.
Here. You will
Yeah.
add. This is the depreciation of the current year.
Current
Okay. Purchase of non-current asset, where will it go?
purchase of non-current asset. It'll go also operating activity. Wait,
Investing.
no, no. Investing, right? Because sale of
Purchase
non-current
of
asset, purchase of
non-current
non-current
asset,
asset.
purchase and sale of non-current asset will also go in the investing activity. Now
Investing
there is
activity.
one thing that you have to see is what? The profit or loss on sale of asset.
Yeah.
For profit or loss on sale of asset, what do you prepare?
Profit and loss on sale of asset.
What do you prepare? You prepare this working note.
Yeah. Correct.
For profit or loss on sale of asset, you prepare this working note where you do cost minus accumulated depreciation
Limit
gives you the book
depreciation.
value.
Book value.
Book value is compared with the selling price.
Selling price.
If book value is less, selling price is more, then you have a loss.
Right. Yeah.
So, if book value is less, selling price is more, then you have a profit.
Profit.
And profit on sale of asset, where will it go? You will minus from operating activity.
Operating activity.
If you have a loss on sale of asset, that means the book value is more, selling price is less. You sold it for a
Yes.
lesser price. Then it is a loss on
Yeah.
sale of asset you will add. Usually profit is added and loss is subtracted, but your profit or loss you
Subtracted.
put separate. Okay.
Okay.
So you
Yeah.
have cash flow from operating activities. You start with your working note number one. I'm sure you know your working note number one.
Yeah.
Yeah. Then you add your non-cash, non-operating expenses. For this, you make the asset year. Depreciation for the current year you need, and you need the profit or loss on sale of asset.
Yeah.
Okay.
Right.
Then interest
Yes.
on debentures, share issue expenses. These are all your non-operating expenses that you add. What you get is
Yeah.
operating profit before WC changes. What is WC changes?
Working capital changes.
Working capital changes. In this, you will do your working capital changes, things related to current assets and current liabilities. We have
Right.
five current assets. What are your five current assets?
So
What are your five current assets? Closing inventory, trade receivables, cash in hand, cash at bank, other receivables. You should know these things by heart. What are your five current assets? Closing inventory, trade receivables, cash in
trade
hand, cash
receivable,
at bank, other
cash at
receivables,
bank,
prepaid
other
expenses, and
receivable.
outstanding income. You also have your current liabilities. What are your current liabilities?
Current liabilities.
That would be your creditors or your trade payables. You can also have your bank overdraft. Okay.
Overdraft.
So when you're treating your working capital changes, you are going to take these items, your inventory, your trade receivables, and your other receivables.
Okay. Yes. Yes.
Okay. If current assets increase, what do you do?
If current assets increase, it will be subtracted.
And if current assets decrease, then you will add.
Add. Yeah.
Okay. How about current liabilities?
If they increase, it will be added. If they decrease, it will be subtracted.
If they increase, you will add. If they decrease, you will subtract it. In this, you are only going to take into consideration the creditors and trade payables.
Yes.
How about the bank overdraft?
Bank overdraft.
Okay, this would go in financing activity.
Okay.
What is bank overdraft?
Ma'am,
Bank overdraft is when you withdraw more money than what you have in your bank account. If you have withdrawn more
okay.
money than what you have in your bank account, that means you financed your business by using this more money.
Yeah.
So it's a financing activity. If bank overdraft has increased, then it is inflow. If bank
Okay.
overdraft has decreased, then this is an outflow.
Outflow.
Are you with me?
Yes.
I again go to our operating activities. How do you start your operating activities?
Ma'am, we first start from profit before tax and extraordinary
This will go in
expenses.
your working note number one.
Yeah.
You
Working
know
note
the
number one.
format of your working note number one. Then you have
Yes.
non-cash, non-operating expense and income. Okay. Here two things related to asset comes. What are the two things related to assets?
Two things related to asset, like the non-cash, non-operating expenses, non-cash,
One is
non-operating income.
depreciation and one is profit or
Uh,
loss on sale of asset.
yeah.
How do you get depreciation?
And what?
How do you get depreciation?
How do we get depreciation? Uh,
Closing minus opening
Closing minus opening
plus sales.
plus
How
sales.
do you get the profit or loss
Oh,
on sale of
that.
asset?
Closing minus opening.
Profit or loss on sale of
Profit and
asset.
loss on sale of assets. It will be what?
You need to know these, Bakir.
Yeah,
Time I can't. Profit or loss on sale of asset, cost minus accumulated depreciation. You get the book value, compare it
book
with the
value.
selling
Yeah,
price. If you have sold it for more than the book value, it is profit. If you have sold it for less than the book value, it is a loss. Then you do
loss.
your working capital changes over here. Five
Yeah,
current assets, two current liabilities. In that, bank overdraft is also financing activity. You get cash
yes.
generated from operations minus tax paid. Either they
Tax
will
paid.
directly give you the tax paid. If they don't directly
Yeah,
give you the tax paid, then what?
we make a tax account.
If they do not give
Tax.
you, they can either directly give you the tax paid. The tax paid has to
Yeah,
be given directly. If they do not give you the tax paid directly, okay, if this is given to you indirectly, then what will you do? Whatever is your tax of the last year, you
okay.
pay
Last
current.
year.
Are you with me?
Yes, miss.
So you get cash flow from operation or cash used in operations. Are you with me again?
Yes, miss.
Okay, so cash flow is IAS, what? 7. You have 3 activities: cash flow from operating activities, investing activities, and financing activities.
Financing activities.
Investing activities means purchase and sale of
Sale of
non-current
non-current
assets.
assets.
This is your base. Then anything related to investments. Okay, interest on
Yes.
investment, receiving dividend, receiving anything that is related to your investment comes as investing activity.
Yeah.
Okay, this is one thing that you know normally kids get confused in receiving dividend. Receiving dividend is investing activity.
Yes.
Paying the dividend is financing activity.
Financing activity.
And paying the dividend comes in two places. One, it comes in financing activity. One, it comes in your working note number one.
Yeah.
Okay. Paying the
Yes.
dividend, working note number one. Working note number one is related to what?
Operating activity.
Net profit before tax and
All
extraordinary
all
items.
items. Yeah.
Okay. So investing activity is related to non-current assets, investments, receiving dividend.
Yeah.
Paying dividend, financing activity. Now, when I go to financing activity means where I arrange my finances from.
Finances.
Where
Yeah.
I arrange my finances from means what? I take loan, I issue
Yeah.
debentures, I issue
Issue
shares,
shares. Yeah.
issue debentures, money coming in. Taking bank overdraft, money coming in. Taking loan,
Yes.
money coming in. Okay. Paying the loan, redeeming debentures, redeeming the shares, money going out.
Out.
Dividend paid, money going out. In this, you also have share issue expenses, underwriting of share expenses. These are also some unusual financing activities. Are you with me?
Yeah. Yes, miss.
You get cash flow from operating activity, investing activity, financing activity. You get net cash flow. That is a total of all the three.
Yes.
In this, you add your cash and cash equivalent at the beginning. That means your opening cash balance. You
Yeah.
should arrive at your closing cash balance.
Closing cash balance.
Are you with me?
Yes, miss.
4 things related to assets that you should always keep into account. 4 things related to assets
Four
that you should
things.
always
Yeah.
keep for.
Yeah. Asset purchase. Like
Hmm?
assets. So
Asset purchase at the cost, investing activity.
yeah.
Asset sold at the selling
Asset
price,
sold.
investing
Selling price.
activity. Profit or loss on sale of asset, non-operating. Profit is a non-operating income you will minus. Loss is a non-operating expenses you will add. Are you with
Yeah.
me?
Yes, miss.
Depreciation of the asset, non-cash expenses. Again, add. For depreciation,
Yeah.
closing plus sold minus opening. For profit or loss, cost minus accumulated depreciation gives you net book value.
Netbook. Yeah.
Okay, there are certain transactions which are not regarded as cash flow.
Yeah.
What are these transactions that are not recorded as cash flow? So any movement that is between cash and bank is not regarded as cash flow.
Not regarded.
The examples of this is cash or check deposited into the bank, cash withdrawn from bank, purchase or sale of short term marketable securities. Learning this is very, 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 very important.
Okay.
So these are some things that is related to the things that is not coming in the cash flow. It is not regarded as cash flow. Okay, so
Yeah.
here we've done everything related to cash flow. If you are watching this video or if you are revising, you should know that you have the notes in front of you and you've already seen all the videos and practiced everything. Only then you will understand. Okay.